Hi all, my name is Arun Salim, and I'm so excited to share my presentation on business analytics in the UK banking industry. From 2014 to 2023, today we will dive into how 10 major UK banks have performed, what the data tell us, and how they can use analytics to stay ahead in a fast changing world. Let's get started. Here's a quick snapshot of what we found. We looked at 10 UK bank over a decade using Statista data, and there's a lot to unpack. HSBC's asset grew to 2.39 trillion by 2023, showing the sector's strength. Revenue peaked in 2022 thanks to digital banking, and this insight can help banks stay competitive. We will explore how they can do that as we go along. So, why does this matter? UK banking is a global leader, but it's facing big challenges from fintech. Those new digital startup sharing things up. My goal is to use analytics to see how Tenback performed from 2014 to 2023 and suggest ways they can keep growing. We will focus on financial trends and smart decision making to help them thrive. Literature overview on business analytics. Let's see what the experts say. Analytics is all about making decisions based on data, and in banking, it's a lifesaver. It helps improve efficiency and manage risk. As a Wittgen and team point out in 2019, plus Duan and colleagues in 2020 said it's essential for staying competitive. It's like having a superpower to plan and innovate. UK banking industry overview. Now let's look at the UK banking scene. We have got big retail banks like Lloyd and Invest Bank like Barclays with total asset of 1.2 trillion. They're adapting to fintech disruption and post-Brexit rule as IBIS World noted in 2024. Digital banking have been major drive of growth lately, changing how we all bank. Data collection and gathering. Here how we got our data. We pulled numbers from Statista.com from for 10 bank, HSBC, Lloyds, Barclays, and more. Covering 2014 to 2023, we looked at things like total asset, revenue, net profit, CET1 ratio, which shows if they are financially safe, and risk weighted asset or RWA to understand the risk levels. Descriptive analytic, industry dashboard, assets. Let's start with visual. The statistic graph shows how total assets grew over the year for our 10 banks. HSBC hit 2.39 trillion in 2023. Pretty impressive. It's a sign of the sector's financial strength, showing how banks have been building the foundation to support customers and grow. Descriptive analytics, industry dashboard, revenue. Next up, revenue trends. This chart shows revenue for our 10 bank from 2014 to 2023, and you can see it peaked in 2023. Why? Digital banking took off. More of us started using apps and online service, but it's various. Retail banks like Lloyds and challenger banks like Metro had different paths. Descriptive analytic summary statistics. Let's break down the numbers. For our 10 banks, assets average 1.2 trillion with a spread of 300 billion, showing how banks are much bigger than others. Revenue averaged 50 billion, profit 10 billion with a skewness of 1.2, meaning some years were extra profitable. CET1 stayed steady at 15%, which is a great for safety. Correlation analysis. Now let's see how these numbers connect. This correlation matrix shows revenue and net profit have a strong link at 0.85. When revenue grows, profit usually do too. Asset and RWA are also tightly connected to 0.90, meaning bigger banks take on more risk. But CET1 and profit only 0.30, showing rules can limit profits. Regression analysis, linear model. Diving deeper, we run a linear regression to see what drives profit. We looked at a profit versus revenue, and the result a strong R squared of 0.72, meaning revenue predicts 72% of profit changes with a significant impact. P value less than 0.01. It's clear revenue growth is key to make more money. Regression analysis, multiple model overview. We also did a multiple regression looking at a profit against asset revenue CET1 and RWA. It explains 78% of profit changes with an R squared of 0.78. Revenue is the biggest driver with a beta of 0.62, but CET1 has negative effect at minus 0.15, showing that keeping extra capital can slow profit growth. Regression analysis, multiple model details. Here the equation. Profit equal a negative 5 million plus 0.62 times revenue minus 0.15 times CET1 plus terms for assets and RWA. The negative starting point reflects fixed cost banking have to cover. Revenue P value is less than 0.01 and CET1 is under 0.05, confirming the strong role in predicting profit. So, what's the big picture? The UK banking sector is resilient. Assets grew and revenue peaked in 2022 thanks to digital banking. Analytics shows revenue drives profit, but digital trends and regulations mean banks need to adapt. It's all about finding the right balance to keep growing. Recommendation. Here's the what bank can do next. Invest in digital platform to boost revenue. Think better apps and online tools. Use analytics to predict risk, like watching RWA trends and diversify revenue beyond traditional banking, maybe through new services. These steps will help them stay ahead and serve customers better. Thank you so much for listening. Have a nice day.